go. Welcome everyone to the trading room. It is November 2nd. 2 more months until 2022 says goodbye. And it was a pretty awesome move in October to the upside. It might be all for naught, and we're going to talk about it. Let's jump into it, folks. I've got my 2 cents. You know how it works. I'm going to share it with you. We're going to share some trades, take responsibility for the outcome. So, what do I mean by this? Well, if you guys take a look back at the charts, and this is something that I like to do every once in a while, I get so caught up in day after day after day that you kind of you kind of rule out where everything began. And if you go back to the markets on the 13th of October, the CPI comes in line. Now, it's not falling apart. It's not showing that, hey, inflation's slowing and it's gone. But it came in line, which was projected to at least pause. So the markets took it as a first sign of slowing. Huge gap down on Thursday and just took off. We have been actually moving higher ever since that. And it's been interesting because we've had a couple extra catalysts there, slowing in manufacturing and housing. But we have a consumer that's still active. When we have employment that is still pretty strong. So let's take these in steps and stride here, folks. Sentiment is speculative, optimistic, or we just simply in a gigantic bear rally. And it's been interesting because the conversations I've had with a lot of you and some of the guys here is a little bit of everything. Speculation, hey, that's got to be the bottom. It can't get any worse. We're going to get through an earnings season that's been pretty awful. A lot of the tech companies have been really beaten down. But what raised an eyebrow was I was doing my research on the overall chart since the 13th, and seeing that, geez, this has just been a massive surge to the upside. Volume's been pretty decent as well. So is it speculative, optimistic, or is it just simply a bear rally? Then I get into the economic data. We had a pretty big uptick in the ADP number today. I'm going to show it to you guys. A big one. Over 230-something jobs expected to be under 2. Corey made mention yesterday of another number that actually came in line. Employment is actually increasing. Interesting, right? So we do have that FOMC today. We're going to get to those numbers here and kind of break them further down. So are we setting ourselves up for a pretty good sell-off? Chart-wise, maybe. Some of these numbers, maybe. We'll see. Or are we overreacting to something that the markets aren't afraid of? Isn't that interesting, right? So I've got this, I could see it go either way mentality. You know me, I love Fed days. No, I don't. All right. So we do have some trade ideas. Lots to the bear side. I'm trying to stay as neutral as possible, but folks, a lot of these bears just look really, really good. ETSY was one of our sideways trades, and it's also looking super bearish. I didn't show a couple. Let me just, now that they're in front of me. ETSY, I believe, has earnings, if not tonight, tomorrow. COP, ConocoPhillips, which I do have a chart up, has earnings on the 3rd, so Thursday morning. So these things still have some earnings. Some are past H&R Block, but they're really good looking charts. So let's get through some of these. This is UNH. United Healthcare actually did have its earnings. It did well. I love the breakout that it had here. I can't really talk unless I have my pin. I like the breakout that it had right about there at the 530 mark a couple weeks ago, and it's just tapered up. Broke above resistance there at the 550. Retested a little bit, but it's hanging out. So sideways to up. UNH looks really, really good still. Very strong. Beat its numbers, right? I believe this already did have its earnings. So something that we can trade immediately, right? If you want to sit through the Fed meeting first. Yeah, I'm going to make mention of that a few more times. So here's ConocoPhillips. This looks really good. However, unfortunately, it does have its earnings tomorrow. So put that in your pipe and smoke it, right? Now you can play this to the upside or a breakout or continuation. I'm sure the numbers will be pretty decent on this thing. Is it enough to really skyrocket it above the 130 marker? Is this thing just going to kind of hang out where it's at? If you want to play the volatility, go for it. If not, just sit back and wait. For those of you that are in this, you probably have a pretty healthy profit because I know that we were talking about this at this break. Somewhere back in this area through this consolidation at 115. This has been up on our bull list for quite a while. So if you're in it and you don't want to sit through earnings, now would be a good time to cut and run. Might be something pretty cool. Or just see what it does. and you can get into it after its earnings. Let's take a look at LNG, another energy company. I just love the pattern on this. Didn't check its earnings, so if you guys want to triple check that, but I just love the ascending triangle pattern. Diagonal spread all day long, looks pretty good. Depending on what strike prices you have in expiration cycles, ideally diagonal would be good, but if you get caught in a vertical spread, I'd still be pretty confident with it. Unless these markets really correct or fall apart, I don't think this thing is going to really break its track. If the markets do good, if the Fed comes out and does something that the markets agree with, this will just continue higher. So it's kind of it's really favoring the bull side there. All right, so moving on. We have, sorry folks, I forgot to get rid of these. Are my two sideways slides from last week. We'll just cut those out. Let's move on to Newmont. This is a bear that I liked. We had a pretty good range between the 45, moving down to the 40 level. I just believe if we continue this route, we might break the 40 and fall. So if you guys want to play this sideways between 40 and 45, it's still above it. It's still above its 40 level. However, I just got this weird pessimistic feeling based on the moving averages, how they're kind of crossing back over, rolling back over, that this might slip through the 40 level. So I've got it on my bear watch. If you guys want to do something range bound, it still has the potential to bounce off the 40, especially if things turn around after this Fed meeting and things go super bullish. Right, we'll see. Let's move on to PANW, and this is Robert's got one. He's got PANW and CRW bears, but already down a lot this morning. They are. Let's talk about it. I like it, and why I like it is because it's already given up the ghost. It is in technology, it's software, it's preemptive. The NASDAQ itself is slipping pretty good ahead of this Fed meeting. So could that be just in sympathy, or is there something news-wise? Go ahead and do a little bit of research, but I don't want you to be afraid of it. Anybody, Robert, all you guys, anybody that's looking at it, because this does have the it does this often, right? It's got the habit of doing this. Now, it does bounce as well, so it's one of these things to where, hey, do I really want to catch a falling knife? This is a little bit different of a pattern that it's in here, where I could see, well, that's not very straight, this upper line, sorry folks, where I could see this is probably just trying to get back below that 20-day moving average. It might subside and go lower. You do have a support. Let me get rid of these lines here and draw fresh ones right at the 160 market. It's going to be this previous pivot before it came off of its low. So almost a hiccup there as well. So right around that 160s is where I see this falling knife stopping. But if things continue to be bad and go south, I could see it continue to roll over. So I did like it as well on a watch list. The other one was H&R Block. Now H&R Block was on our bear watch on the 12th, actually just before the markets bounced, right? Very interesting. As a bear rally, and it did. It did have its earnings, I believe, yesterday. It's got to be yesterday. So that's what we're seeing. So if you don't want to sit through the volatility and let today play itself out, you can see that the shadow came down and almost touched that 38 support level. This volume will finish pretty high, I imagine, once the day is done. But if you want to let just kind of play itself out, I imagine this is going to continue lower. So I do like that as well. So there are some trades to look at. Feel free, please, to look at some of the others. Understand that there are some earnings inside of a few of those. We are still in earnings season. Boy, we've got AMGN. I think we got Starbucks coming up. We got a bunch. So PayPal is coming up tomorrow. A bunch of big ones. So it's going to be interesting with this Fed meeting that we actually do have a whole lot of earnings still. So these markets, I imagine we're going to get into some serious moves, whether that's up or down, pretty soon. I'll have to echo what Corey said yesterday as we jump into the market analysis. We might not get it today. We might get it tomorrow or even into Friday. So I think a lot's going to be hanging on the Fed speak, especially if they do the 0.75% that are expected to increase at. So where are we at so far with market performance? Pretty much flat. Now the Qs and the SPY have given up about 1.5%, just over. but the diamonds are just sitting flat. The Dow 30 is pretty flat. Now that's from Monday, so we knew that we had that big rally since the 13th of October or 12th, right after that CPI number, and we've gone up. We've got up to these resistance levels. I'll get here in a second, and kind of parked it. Oil has had a big move over the last 3 days. This is just 3 days. This is just so far this week, and gold has stayed pretty much flat. So let's get into the charts and get a little bit more into it. So this is just the slowdown that we've seen. Remember, this is just this week. I'm going to circle these 3 days here. And so we don't really have much to go off except we're above that 50-day moving average, and we're kind of consolidating right around these support levels here around the 380 level. So we could see that it hit a resistance here early October when it came off of that low that it set in the 13th. It's just gone gangbusters. So we've had a pretty good surge, which made October one of the best months in history. Boy, the best October in a long, long time, at least specifically for the Dow. I'll show you that chart here in a second. So we're back up into this flip a coin area. Now Corey made mention of this, and I think it was really cool that we do have this channel. And I'm going to take it all the way back to the previous pivot here in June, right? Because June did set our previous low before that happened. So taking this into consideration, we are still in a super bearish channel. I mean, I could cut some of that off of today, right? That's fine. But ready to continue a bear trend, it's just set for it. And that bear move will probably last, if we do get a big one, could last a month and a half like it did last time. Let me erase it and start over. Here's where we started last time, a little bit of a retracement, a little bit of a retracement. So that's a pretty good bear move, spanning between mid-August all the way to basically the end of September. All right, draw another line here before we actually got, all the way till October 13th. So it's looking ominous. Charting wise, it has to be. It really is. It's easy to see there's lots of bearish things of worry moving forward, but are the markets truly ahead and we're just trying to play catch up? That's basically the biggest conversation question that I've had over the last couple of weeks. Here's the diamonds. This is the 30, and this is a lot. You could see, okay, obviously we set a record in October. I think we're over 14% to finish the month. That's a massive move. However, if you zoom out on this, it's a larger bounce. I think this might come back, maybe hold here before it really falls apart. If we are going to get a pretty massive correction, I'll tell you something straight out. If you take a look at what's on the bear side versus the bulls, even our watch lists, I mean, folks, we've got energy, utilities. Like I say, the one of ConocoPhillips was up there. It's got its earnings. LNG, another energy, it's up. So you probably want to stay away from this bear-wise and just attack the SPY and more importantly, probably Qs. There's not too good of news coming out of it. In fact, let's just move over to it. Complete different story, isn't it? This barely revisited its falling 50-day moving average. I mean, it's just at its resistance. It just has this reverse little head and shoulders. It's about to roll back down. Just super ominous versus the Dow, which looks like, hey, that was the end of the bear market, and we're going to fly up and set new highs. Crazy, a tale of two different stories there. So very difficult. We'll have to figure it out. All right, so let's get into the economic reports. This is the one that I really wanted to talk about. Two of them. So the first one was the job openings, and this is the jump up that Corey mentioned in his end of day. Now, the Purchase Managers Index, the PMI, amount of manufacturing, it's in line. This is still pretty low. It did tick up just slightly. That's fine. But these are going the right direction. Now, what I thought was interesting is when you start to see job openings, and this is that ADP. Take a look at this, folks. This came out this morning. 239 with an expected 195. It was expected to go up from last time, but man, that's a pretty good push to the upside. I'll give you this. I do believe that these are a little behind. I do believe that these numbers are one of those ones that are a little bit behind. This one on unemployment, right, and then the GDP itself. So we saw an uptick in the GDP. These could be the numbers that are a little bit behind. But the ADP, I'll have to look deeper into that, folks, because that might be not as delayed as I think it is. But this also was interesting. Construction spending increased. And it could be seasonal. It could be state by state. Well, just be honest here, folks. I can't believe how much construction has popped up all over my neighborhood and some of my main streets. Some pretty big ones. So, does that just subside once it starts to really get into winter? I don't know. But a lot of these things are still pointing towards being a little bit hotter. What else do we have? Well, the big one is the Fed. You saw that there at the bottom. Don't need to highlight it. We're talking plenty about it. But we'll have jobless claims, continuing claims. We've got non-farm on Friday. I don't know if that adds insult to injury. Let's say that the Fed does something that the markets are okay with, they're kind of neutral with, or maybe they're a little bit upset about. And then this non-farm payrolls comes out and it's up high. It shoots up just like that ADP number. That just shows that inflation's up. Let's say that the unemployment rate comes in line or it actually a little bit lower. So there could be some catalysts that could add insult to injury. I'll highlight these a little bit here. So if we see some heat, I should say, in these numbers, unemployment drops, non-farm payrolls increases just like the ADP did. That just shows that inflation's still there, and it could add a little bit more fear and increase selling. Right? So usually these numbers don't mean anything because the Fed market is so powerful, but sometimes it does. All right, so let's pull the class here. And why I launched the poll. Oh, I got to select it first. All right. I will peruse through some questions. Let's see what you guys got. All right. Sebastian's got a good, interesting question. Why hasn't gold, silver rallied or reacted stronger in the face of this record high inflation? Where's the inflation hedge? Sebastian, that's a super good question. I imagine a lot of it was probably into utilities, energy. I don't see a lot of stuff leave the markets. I didn't see a lot of money leave the markets. I just saw it go into other things, defensive stuff, utilities, energy. Look at Schlumberger, materials, chemicals, stuff like that. I saw that. The other thing is, I would think a lot moved into the cryptos, but it didn't because the cryptos got smashed and they've just been meandering right around, Bitcoin right around 20,000. So I didn't see much there. But it's interesting that the dollar just got super, super, super strong. And the big surge into the dollar was interesting. But you're right. It's kind of a head scratcher why gold and silver haven't really rallied when it comes to maybe some of the fear. Let's see if we do get a push to the downside or some sort of bearish reaction if we do get a little bit of a tick up in the precious metals. But that's a really good question. It's pretty interesting. All right, guys, look at that. 100% voted. Super. I'm going to go ahead and close and share the poll. And we are definitely on the bear side. 47% 0, 40% -1, 33% -2. So I just say we're -1. -1's fair. Yeah, -1. That's great. All right, guys, cool, thanks. So I'm going to hide this, put it back, and I'm going to share mine. I am zeros. Absolutely zeros. So let's see if I got these right. Yeah, above the 20, above the 50, the slopes, 20, 50. If I had to go longer term, my monthly outlook would be -1, -2. I don't think we stay here very long after today. Whether we go up or down, I just don't think we stay here very long. I'd like to say -1 just because I'm seeing a lot of pessimism, a lot of good charts technically, but if you were to throw out the diamonds and the Dow 30, you take a look at the SPY and especially the Qs, it doesn't look very good at all. And some of these numbers are just atrocious. Even Apple did pretty well. Not the greatest. They're expecting a slowdown. Their phone sales weren't the greatest, but they were okay. So, I don't know. Kind of your call from here. But I am absolutely zero. So nothing's going to slide when I click the slide over, right? No up or down. So let's get into the sector analysis, strongest and weakest. And it's been exactly what you'd think. It was from last week was consumer services. Guess what? Consumer services again. Utilities were the stronger one. I believe it was energy last time. But between utilities and energy and industrials, they've been in the top three this whole time. So a little bit of a slide there, 4.4% in the communication services. I truly believe that has a lot to do with Google and Amazon, period. I've shown you that a few times. Corey actually went across a heat map yesterday in the end of day post, and They're a big component of it. Utilities-wise, energy, all Dow components, the Dow 30 straight up, still showing a lot of strength. So let's look at the charts here. So XLU is just a bear rally. Even though it is one of the strongest, it's not even above its 50-day moving average, just got above its 20, showing signs of bearishness. Take a look at this. Oh, that's not where the line needs to go. Right at the 68, so where it hit in July. It's just downtrending, all bear. Actually, it's kind of funny because, hey, it's one of the stronger ones, but still super bearish. And then on the bearish side, this just looks like a descending triangle pattern, or I should say a low base breakdown. It looks like it's already slipping and on its way to previous low set before the rally in October. Interesting. So, it's where you find it. And I've got my conclusion, and then we're going to go out and take a look at whatever you guys want to take a look at. I know it's a Fed day. These are tough, so these markets will react today, period. I don't know how we get out of this without, I don't even care if it's bullish. Maybe Powell come out and say, well, 3/4, we're in line. This is exactly, we're comfortable here. We'll take off running. That CPI reaction on the 13th just shows that there are people itching to get in these markets and put money back to work. However, it also shows that there's skittishness if we are indeed showing signs with the employment number and consumer spending. It's not falling apart either. Those consumers are still spending money. So if those stay hot, maybe fear will creep back in and will fall apart. So we'll see. The move in quotes is the slower reaction. So we'll see if Fed says something, and then we get that there's some numbers on Thursday or even on Friday, and then we get the initial push up or down. Just be aware. So we will be reactionary on sentiment. There will be some signs of strength in unemployment and spending, but both are lagging indicators, so keep that in mind. I want to make sure that we know that, hey, if there are other reports that could say that, okay, we've seen an uptick in employment and stuff like that, but they are a little bit lagging. The bull has the patience to wait for the next report, then we could take off, so we'll see. All right, enough of that. Let's go out and take a look at some trades if you guys have any. Let me go back through here and read what you have. So a little bit on the pessimistic side if you take a look at what the markets have been doing since I've been blabbling. But that NASDAQ, it's just been going straight down since the bell rang, and this is before the announcement. So there is definitely a little bit of pessimism, or I should say at least fear. Now, fear is usually more powerful than greed, and it is a more reactionary motivator. So maybe there's just a lot of people that don't want to be in this market before the Fed talks. All right, cool. Let me go back through the comments and see what we can look at. We did talk about PANW, but let's take a look at CRWD as well, because that was the other one that Robert brought up. Okay. Yeah, having the same move, another software company, but crazy how these are kind of getting abandoned, aren't they? They're just kind of falling apart here. I like them. I like them both. Even if you kind of feel like you're chasing them, if you're one of those traders that want to get in before the announcement, I don't know. You might get caught in a bounce. That's the only thing that's tough. I mean, a lot of times it might not be worth it. What is today, the 2nd? I should know that. Okay. Just for our notes for our class here. All right, so Robert's also got LVS, Las Vegas. I think MGM was on a watch list for a bull side, so Las Vegas might as well. Condor Butterfly target 38 and 40, between 38 and 40. Sure, yeah, it's a pretty good range here, isn't there? It's here's 40, and here's that 38. You could actually get a little looser than that. I mean, if you want to go bigger, yeah. Shorter term, 38.40. I like how it's moving higher. Sure. Target it, Butterfly, maybe up to the 43. You can do a few things with this. Let me put it down on the sideways for us, LVS, since you addressed us here as a butterfly. Thanks again, Robert. I'll put an up arrow on that just for fun. I know that not all the time that Finviz gets it right, but a lot of times you can take a look at the earnings right here. It's saying October 19th. So Either it's passed or that's off. I don't know which. Worth a look, right? Cool. Thanks, Robert. Now let's move on. SQ. Yep, Justin. SQ is one. I don't know if I put it on our watch. Corey brought it up yesterday. I do like it. I think I left it off just because I had so many bears. Yep, absolutely good. Looks nice. Technology, software, same idea. I mean, that's three in a row. PANW, CRWD, SQ, all tech, all selling hard right now. So maybe somebody knows something we don't. All right, let's finish with. Justin's got a play for this 48, 53, 58. Is that a put butterfly? Yeah, let me go here. 58, 53, which is probably here, I imagine. And then 48, somewhere down in here. So targeted butterfly to the put side. Sure. Yep, sure. See if it can't just get back down to this area here, stall out, or if it falls and comes back. Sure, I'm okay with that. We got expiration is November 11th. So that is week 2. Week 2. Thanks, Justin. Also, AKRO. Let's take a look at that one. Biotech as well. Just don't have the options I want available. No weeklies. Maybe a slower play. Or straight call. Straight call on this one. Just put a stop on it or have a target if you can afford it. Sometimes that's the best thing to do, especially if you don't have the right expiration cycle. I always understand this, folks. You always have your top-down approach. You're going to have your outlook, your target, all that thing has to be done before. I don't even look at the options chains. You know, if I can't get the expiration date that where I want it, then unfortunately I just won't sell it. It does reduce your costs and increase your risk rewards, like at least the margin of it, right? Lowers the cost, higher percentage gains. But if I just got to bite the bullet and buy the 40 call, I'd do it. If I really like it, and I think this is going to hit 50 in the next week, then it's okay buying the November expiration 40 call because you can cut it anytime you want. Oh yeah, yeah. See, so Michael has even heard that the Bitcoin is the kind of the flight to safety now, replacing gold and silver. Sure, there's a generation out there that still believes in it. That's going to be an interesting play. Bitcoin is one of the more true ones. All the other cryptos, you could trace it back to a creator. So there's manipulation, there's production worries. Bitcoin's kind of pure. The only problem that I have with Bitcoin, to tell you the truth, is there's only a handful of, well, I shouldn't say people, but companies, entities that actually own the majority of it. So now it can be manipulated. My 2 cents. And no, it's not Matt Damon, just to let you know. All right, let's go Visa. Let's take a look at Visa. All right, we got Visa. Looks like it might be forming a lower high. Possible target for a put butterfly. All right, Dan, let me take a look at it. Yeah, also, yeah, okay, cool. Let me go back to this. When you're zoomed out, it's easier to see. And it wasn't until I really looked at the zoomed out SPY that I noticed that move off of the 13th is just, since October 13th, is just just a huge bear rally. And this looks kind of the same when you look at it like this, right? Now, if I had to zoom in, if I can get to my cursor, it kind of takes that away. It makes this move here look a lot more significant than anything that it's done in the past, right? Where it truly isn't. And it's because it's so far above its 50-day moving average and so quick. Now this one might hold on a little bit. It's in the financial sector, so it's going to be stronger than some of the tech. But I do agree with you, Dan. It looks like he could be setting a possible rollover. Now if you wanted to play this to the downside, it looks like you've got a targeted butterfly of 180, 190, 200, and I would agree. right through here, here, and with here. Sure. Or 190, 195, 200 if you wanted to be a little bit, take into consideration the September move there, or where it bounced before the crossover, right? Because it is technically above that area, but it looks like it might be falling pretty good. So yeah, let me put it down on the sideways with a bear. How about that? Sideways with a down arrow. Excellent. Thanks. And let's do this since we're here in front of it. October 25th after market. So we should be past its earnings. We're not in a recession. Oh, Sebastian's got another one. Yeah, since we've officially posted a higher GDP number, does that mean we are not in recession? Right? Wouldn't you think? Well, old school days, it was two consistent GDP increases or two consistent GDP decreases means you're in recession. Now we've had the two or three down ones. This was the first uptick. So now you've got this double-edged sword. Does that mean that we're past a recession that no one really even felt? Or does that mean we're still hot because an increased GDP will justify higher prices? So if prices are the problem, then that increase in GDP is showing that we didn't, technically, we're not ahead of it. We're still growing. We're still expanding, which it justifies higher prices. So it's crazy, and I love this, Sebastian, you bring it up, and this is the argument, or not argument, the conversation I have a lot. The consumer is not feeling it. And ask your guys self this. Are you feeling it? Are you cutting back on groceries or travel or pay services or maybe not going out to eat as much? If the answer is yes, then that's the beginning of the recession and we can actually see this correct. If the answer is no, then we're still expanding. So interesting. That's a point I always try to bring up. But I like that. Thank you for the conversation there. STNG for Nick. Let's take a look at it. I guess we could also include jobs. Or your neighbors losing their jobs, or you seeing shutdowns, or when you go out to eat, staffing is dropping off, or things like that. Bull call jumped in yesterday. Nice job, Nick. I like it. Good confirmation. Absolutely, good confirmation. Right about the 50 here. I wonder if did that have earnings or anything? Scroll down a little bit. Yep, it did. Earnings before the market yesterday, and it looks pretty good. And you got a 50-55 bull call spread. It's as clean as it gets. I'll put that down. STNG, and your expiration cycle is November 18th. So the third Friday. It's so crazy to me. We only have 2 more expiration days, or major cycles, November and December. Fast. Boy, that went fast. I think it's because October was so strong. It just blurred by. Yeah, the 18th is the third Friday. Thanks, Nick. Yep. I'm keep reading these comments. Yeah, it's the job market out there. And to see it increase yesterday and the ADP increase, we're not slowing down. We're increasing, which is, it's good in the long run. It's just we just let inflation get so out of hand. I don't want to really blame the Fed, right? At some point, the consumer needs to take responsibility. But if you're going to keep you're going to keep rates as low as they are with jobs, then yeah, of course we're going to spend money. And that pandemic was just a little bit unexpected because no one really lost their jobs and saved money, and so it's kind of a happy place to be. Let's see, ARKK for Vince. This is ARKNet, yeah. Innovation. ARK Innovation ETF. Look at this. We're just going to keep picking on this one, aren't we? I like it. It's excellent. Excellent rollover. Look at that. Right at the 50-day moving average yesterday. Geez, it doesn't get any more step by step, does it? And he's got the 11/11 expiration. That's week 2. And you are doing a 40-35. Beautiful. Look at that. Doesn't even need to hit the 43. He's just going to go 40, which is, that's about right. Oh, looks like, yeah, great. Excellent. Cool trade. Thanks, Vincent. I love how you guys think alike because I got two more people that brought up ARC. Good job, guys. All right, Matt, what do you got? Mosaic? Let's take a look at it. Basic materials agriculture. Oh, this one's not holding in like the other ones, like Schlumberger. This one's looking, it's in there. It's struggling, but it's not bad. What do you got going on this? November, December, 52.5, 60 diagonal. I could get behind that. Sure. I'd like to see the 20 above the 50, but it is consolidating. It is hanging in there pretty good. Boy, it feels bearish today, but it's above those averages. This is one of those trades that works for you, Matt. I think it's about right. I like it. Let me put it down as sideways with a slight up arrow. All right, let's take a look at Schlumberger. I think they had Schlumberger had really good earnings. Yeah, it did. But they're more oil and gas. Mosaic's more of a, aren't they more like, yeah, agricultural fertilizers, things of that nature. And with the slowdown, if there is indeed supposed to be a slowdown in demand, then these usually fizzle out. But hey, I like it sideways. One thing, Matt, you might want to do is instead of pitching that so upward to 60, maybe do something sideways. Do a 55 calendar. Might be something to look at. All right, great. Cool, guys. Let me type these in. We got a little bit more than I thought we would on a day, on a Fed day. There's our list. Let me go ahead and draw a couple of arrows because I put some on the sideways stuff that aren't completely sideways. I did like Las Vegas up, Visa down, and Mosaic slightly up. I like that one, Mike. Or I mean Matt. Sorry, Matt. So, but something more sideways. Something more sideways to slightly up on Mosaic I think would be better. That way, if it does roll over, you'll be able to cut and run. Or also reduce the cost of the call to begin with. All right, guys, cool. Looks like that's it. That's all I got. And yeah, stay safe. Let's see what happens. I'm not sure what the reaction is going to be, but I know it's going to be pretty volatile. We'll see what the VIX does. We'll see if we do fall apart or if things are good for a little while and then we fall apart. It's going to be an interesting little ride, but we'll have a lot to talk about come the trading room, right? All right, guys, thanks a bunch, and we'll talk to you next time. See ya.